Hi, this is Zamu with the US Chartbreakers here at Zach's Traders Cafe for Monday, the 9th of October. Starting off with the S&P 500 and nice little consolidation here above the rising 200-day line. That's around 42.10 now. We didn't have to hit it in order to bounce, which is normally a good thing. And obviously with the geopolitical concerns at the moment, the update that we've got so far, or at least the better reaction we've got so far, is a bonus. Immediate resistance up there around 43.40, which is a neckline, was the old neckline support, now become neckline resistance. And above 43.40, we're looking for the 50-day moving average of 44.20. That would also fill the gap down that we had in the middle of September. On the downside, the fear would be that we would head back down towards the 4200 area, maybe bear trap the 200-day line, and then go up from there. But RSI at 41, so not quite out of the woods in terms of being above neutral RSI 50, but at least we've had a reasonable performance given the news flow. Onto the stocks, and starting off with a new one for the chart breakers. Here it is. It's Allot and rebound within a falling wedge. Bullish divergence going into the lower lows for October below $200. And basically above $200, looking for the 50-day moving average and the top of the wedge around $225 by the end of this month. The bullish divergence really helping give a better picture there at Allot. On to AMC Entertainment, which hasn't been very entertaining if you were being a bit of the shares. Shares bumping along the bottom here, and the level to break is $9.10, which that was the highest since the shares made new lows. Above $9.10 on an end of day close basis, we could see the shares fill the gap up to the $12.64 area. But at the moment, I suppose that is the best case scenario that we are looking for. We are helped by the way that we've got the an uptrend line in the RSI window, which means that there has been bullish divergence and hence the slow recovery for the stock. Moving along to another new name, and here it is, Houston American. And here you can see that we bounced with it between or within this broadening triangle in place since the beginning of May. Top of that triangle heading towards $265, taking out the 200-day moving average. The bear trap gap reversal, very helpful. That's a bear trap gap reversal from below the August support area, $174. And the view at the moment is that we can hold above the gap down that we had earlier to start this month at 190. We could be heading up towards the $265 area, but that is quite a big proviso there. Even with the bullish divergence and the bear trap gap reversal that we have seen. On to Indonesia Energy, and here very similar type of chart, rising trend channel base in this case though. The top of that channel at $490 and looking for that level while we remain above the 50-day moving average at $370. So let's see if Indonesia can step up to the plate. A stock which was performing very well until recently is up next. The rug has been pulled from underneath Jin, and you'll see why in a second. And the view is that even though we've had the rug pulled at the end of last week, we bounced off the 50-day moving average around $14.30. Above that, we could see the shares at least head back to resistance on the way up around the $19 area, even if this is the best the stock can deliver. Obviously, a rather nasty bull trap retracement from back above the $21 area, which was the June peak for the shares. But with the 50 and 200-day lines both still rising, there is some hope for the bulls to regroup. On to Lockheed Martin, which maybe has one or two conspiracy theories running with it. We saw the shares bounce on Friday before the news from the Middle East, which is interesting. And bear trap gap reversal from below the old September support there, $416. Above that, we're looking for the shares to hit the top of that falling trend channel as high as $450 by the end of this month, if we remain above, obviously, that level, which was the old support for the shares. Moving on to a less high-profile situation, but one which may be of interest over coming days and weeks. Here we've got M-Tron, and the view here is that there's been progress within this rising trend channel from back in June. The breakout pretty comprehensive, and the view is that the longer we stay above the old September peak around $21.20, the greater the chance of a move to $26, perhaps as soon as the end of this month. Massive unfilled gaps to the upside back in August, so plenty of momentum there for M-Tron. Nvidia is next, stock of the year, I suppose, and it'll always be the stock of the year, given the way things are going. Still holding up near the 50-day line. Want to see an end-of-day close really through $450 to give us a potential new move up to $500 plus maybe $510 by the end of the year, allowing for a reasonable amount of time for the shares to take up the slack of what's been an incredible run since the beginning of the year from below $150. Another stock on the front foot at the moment is National Western, and here you can see that we've hit the floor of that rising trend channel. It's more like a rising wedge, actually, but rising trend channel. The top of that channel currently heading towards the 515 mark, and we're looking for that, especially while we're above, the longer we stay above the old 470, 480 resistance zone, which was the post-August resistance for the stock. But the key here, staying above the 470 area for National Western. Next stock is one which is new to our selection, and here we've got Otonomo, and the view here is that got a sort of gentle recovery in place, nice support coming in at and above the still falling 50-day moving average, but it looks as though we're in a rising trend channel base. That's based around the 380 mark. The more time we can spend above 380, the better the chance of a move towards $5 by the end of next month. But obviously, if we break back below 380, then all bets are off, at least in terms of an immediate move up towards the $5 area. Looked at the next stock quite recently, Profire Energy, and here, in fact, we've had the rug pulled a bit like the old situation with Gin Medical, but the more time we can spend above the 50-day moving average at $233, the greater the chance of at least a move back to the old neckline resistance area around 260 by the end of this month. And ideally, there's no end-of-day close back below 220, and today's support area ahead of such a move towards the 260 zone. A big mover coming up next, and one of today's best risers, ParaZero, which is proving that it's not a zero at the moment. We've broken the W-shaped neckline there. It's W-shaped reversal, but the neckline, the middle of the W shape there at $200 rather, and above that we're looking for up to $320 at the top of a broadening triangle in place on the daily chart since back in August. Obviously, quite a fast-moving situation, not one for widows and orphans. Going on to Tesla next, and here it's all about whether the shares can hold the 50-day moving average at $250. If they do, after this consolidation that we've seen since the July peak, we could be heading up to that July resistance line at $270 by the end of this month. Only back below 240 really hurting the idea of a continuation to the upside for Tesla. Finishing off with Weight Watchers, and here slow crawl within a wide rising trend channel which has been in place basically since back in February. We've gapped up above the 50-day line at $10.35, and above that looking for progress, maybe slow progress, up to $14 plus by the end of next month, while that 50-day line and latest gap holds on an end-of-day close basis. That's it for me today. More updates tomorrow.